And we are live. Good evening, everyone. Tonight, we will be discussing the market volatility that we all should be expecting this week. We are about 30 hours away from the elections. Also, we had the stimulus plan fail last Monday, as I accurately predicted would happen. And I knew that would happen just because you are not going to see two polarized political factions get together a week before the election and somehow come up with a plan, because they do not want one party to come out of the negotiations looking better. And I don't expect us to get a stimulus plan probably for another quarter, probably going into Q1 of next year. And that's just simply because if we get somewhat of a split between the House and the Senate where we have Republicans and Democrats controlling either one, then it's going to be gridlock. And that's a potential outcome. Now, as far as the elections are concerned, I believe that Trump is going to lose to Joe Biden, similar to how Al Gore lost the election in 2004 to George Bush. I believe that history doesn't repeat itself, but it damn sure rhymes. And what's going to happen is the same way that the Republicans stole Florida from Al Gore, I believe the same is going to happen with Donald Trump this year with Pennsylvania. And I expect a lot of social unrest to happen because of that. You can already see the cities gearing up for this. They're boarding up the windows and stuff like that. Now, what does this mean for the economy? What does this mean for our investments? If you're into crypto, if you're in the stock market, we're probably going to go a little bit lower from here. And you should embrace that. You should not be scared. On this channel, we preach dollar cost averaging. So if you have a portfolio, and for those of you who you've went through consultations with me and we've spoken about how to balance a portfolio properly, you understand this is why you have gold and silver in your portfolio, because it will smooth out the volatility. You can't have a portfolio of just real estate or a portfolio of just stocks or just crypto, right? You want to have assets that tend to perform better or hedge against this type of volatility. And when there's fear on the street, most people, they flow to cash, they flow to bonds, or they're flowing to precious metals. So if you've been following this channel, you're not scared right now. You're prepared and you're ready to go. As far as social unrest is concerned, if you've been following this channel, you have land, you have supplies, you have, ways to protect yourself. You have crypto. Should you have to flee and go somewhere, you should have your ledger. You should have your seeds. You should also have your precious metals as well. You should be prepared. Now, going forward, what we're starting to see is we're actually starting to see Bitcoin decouple from traditional assets where it's not so much correlated as it was in the past. But again, we don't know, right? So just don't panic this week. Don't get scared. There will be a lot of fear mongering no matter who wins. You know me, I am not a liberal, nor am I a conservative. I'm not on the Republican, Democrat, left, right train. I don't think like that, because I believe that they're just the left and right wing of the same bird, and they're both flying towards the same end game, which is the Great Reset. And this is all a part of the Great Reset. Also today, we're going to discuss what happened with Harvest Finance last week. I think that this is very important for a lot of you who are inside of My Tech Academy, and you keep asking me about why I don't teach about DeFi. And what happened in Harvest Finance is exactly why I do not really focus on DeFi that much, because I'm an OG, man. I've been around the block enough. I know what I know because I know what I know, because I've been through it. Many of you haven't experienced a lot of these schemes that these developers and these influencers come up with. And Harvest Finance was just another one of these schemes that was able to be exploited. And now here you have people losing money. We watched this happen with Yam. We watched this happen with sushi. At a certain point, you have to get it in your mind. There's no such thing as a free lunch. If you don't know who the sucker is, most likely you're the sucker. And then we're going to get into some of the economics behind the debt, the deficit, what's going on, what's to come. So now, if you're interested in learning about blockchain technology, learning about crypto, we have My Tech Academy, where we're basically teaching you how the technology works and how to use the technology. We also have a coding bootcamp going on as well. As far as consultations is concerned, I reached out to 2 of you who booked a consultation. Check your email. If you're looking to book me for a consultation, I'm available for this week. So definitely come over here to My Tech Academy. A link is in the description below. We have a free 7-day trial. You are welcome to try it out and see if you like it. For those of you who are students of My Tech Academy, I created a Slack channel for us, right? So we have our own Slack group now. This is going to help us communicate with one another better, where we'll be able to have instant feedback, because I feel like the community tabs that we have in the Academy is just a little too slow. So we have a Slack group. Go into the community tab, join the Slack group, and we can interact in different channels. I think that that's really going to help us be able to communicate a lot better and really build a community, because that's in times like this, in times like these, you need to make sure that you are part of a community where you can bounce back information with one another. You can network with one another and really build relationships, because many of you may live in certain regions of the world, or you may come from certain demographics where a lot of people are not thinking the way that we are thinking. A lot of people are not planning for the Great Reset. They're not planning for this digital revolution that we're about to go through. Many of us who are planning and walking with intent and doing things with intent, we will thrive. We literally will thrive in the coming Great Reset. And then there will be those of us who won't. For those of you who are going through the coding bootcamp and you may be struggling right now with picking up JavaScript and web development, understand that this is a skill set that you're learning that you'll be able to work anywhere in the world. So that's why I keep trying to tell a lot of you, push through. I know a lot of you are struggling and with some of these concepts. That's why we have the Slack group now. Understand, as a developer, you will have a skill set that you can take anywhere in the world. Doesn't matter if the United States is in decline and China becomes the next superpower. You will have the ability to be able to earn and thrive, because there will be parts of the economy that will feel like a boom, right? If you're investing in assets right now, you're not worried about, the Great Reset, because most likely those assets are going to perform with inflation. Right now, if you're working in certain industries, it's going to feel like the Great Depression for some of you. So it really just depends where you are in the economy and what skills you have. See, I keep trying to tell a lot of you, you will earn more money by being more skillful, right, in the marketplace. Try to acquire and learn new skills. So with that being said, if you can see me clearly, hear me clearly, type 1 in the chat. Also, please like this video, share this video, subscribe, hit the notification bell and set it to all so that you can be notified when I go live. Also, join my mailing list. A link for my mailing list is in the description below. If you want to contact me and dialogue with me, a link to my Instagram page is in the description as well. Simply follow me on Instagram, shoot me a DM, and we can begin the dialogue. And as I said before, if you're interested in learning about web development, learning about blockchain technology and different cryptocurrencies, we have My Tech Academy, and we have a free 7-day trial. You can try it out for 7 days, and if you like it, you can stick around. And with that being said, let's get over here now to the whole stimulus thing. Give me 1 second, guys. So last week, the stimulus plan failed. And the whole hiccup was the size of the stimulus. They were talking about $2.2 trillion and bigger. That's what the Democrats wanted. And the Republicans were coming in. First, the Republicans started at 1.6 trillion. I said billion. Let me fix that. It was 2.2 trillion and bigger that Nancy Pelosi and the Democrats wanted. And the Republicans first started at 1.6 trillion, and then they started inching up and they got as high as $1.9 trillion. the very first thing what you have to understand is that this money isn't free. I know with this whole modern monetary theory, the way that people think, this money will have to be paid back at some point. And as big as the deficits are beginning to start to grow and get, there's no way that we're ever paying back this debt. So this is going to be extremely problematic because, again, you have conservatives who are supposed to be fiscally conservative, and yet they're floating the idea of a $1.9 trillion stimulus. Now, when we start talking about the Great Reset, all of this is part of getting Western countries deep in debt. And we're going to cover that in a second. Now, also understand this Great Reset's going to hit you in waves. So right now we have the stimulus wave, right? Now we have the second wave of the pandemic getting ready to hit us. Now they're talking about the eviction moratorium that's about to be waived. I want you to think about this now. Coming, I believe, in January 1st. So the next crisis that we're going to have is we're going to have a lot of people who potentially are going to be homeless. And you have to start thinking about this, right? Social unrest, start thinking about the protests. All of these things are part of the Great Reset, hitting you from so many different angles. You have to be a three-dimensional thinker and be strong enough to understand what you're looking at. And there will be a lot of volatility in assets to come. How do I know this? I know this because history doesn't repeat itself, but it definitely rhymes. And when you look at Klaus and you go to the economic forum, the Davos Economic Forum, they basically told you what they wanted to do. I shared the front page of the Time magazine where it said the Great Reset on the front of the magazine. I've been talking about the Great Reset on this channel now for 8 months now, 9 months now. You can't look at this anymore like this is going to be, some conspiracy theory here. This is what's going to happen. And, again, if Joe Biden wins, which it looks like he will win as I predicted, if that's simply going to make the money printer go brr. You already know that. You should know that they are going to print. That's what's going to happen. But they're going to do it in a way where they're going to want to control you. And part of getting the West deep in debt is to usher in the one world currency, the central bank digital currency, right? This is all a part of what's to come. So when you start looking at this is the debt clock. And I think that many of you need to pay attention to this because I know a lot of you are hurting financially and you're saying to yourself, I just want the stimulus, and that's cool. But understand that for every action, there will be a reaction, and there are pros and cons to everything. There's no such thing as a free lunch in life. That stimulus money is going to come at the expense of inflation. That stimulus money is going to come at the expense of the death of the dollar. That stimulus money is going to come at the expense of you losing the reserve status of the dollar. And if you lose that as a country, you will lose many of the freedoms that you have and enjoy and the liberties that you have. And that's just the reality of what's to come. So you need to make sure that you are paying attention and doing your due diligence. And as an investor, making sure that you are flexible, making sure that your portfolios are balanced in a way where you can reap the rewards and benefits of the inflation that's to come. Because we know the Democrats, they want a lower dollar. They want that 100%. So I came across this article and I find it funny because, I always talk about this stuff and it's funny to see it, especially if you've read books like 1984. Then you would understand that a lot of the information in the Orwellian, the way that they speak, how Orwellian this is. Just read the articles and they're basically telling you what's to come, right? It says, we have crossed the line debt hawks warned about for decades. The debt of the United States now exceeds the size of its gross domestic product. That was considered a doomsday scenario that would wreck the economy. So far, that hasn't happened. And again, you have to pay attention to this. It says, economists and deficit hawks have warned for decades that the United States was borrowing too much money. The federal debt was ballooning so fast, they said, that economic ruin was inevitable. Interest rates would skyrocket, taxes would rise, and inflation would probably run the world. The death spiral could be triggered once that debt surpassed the size of the U.S. economy, a turning point that was probably still years in the future. Now, see, understand, when they write these articles and they talk about this, this is when the economy is booming, when it's thriving. But the boom is part of the problem, because the boom happens because of what? Too much cheap money, too much debt. And then the pen comes. The pen can be the housing crisis. The pen could be 9/11. The pen could be the pandemic. And when the bubble pops, this is the problem with this fractional reserve debt-based system, is that there's so much debt, and there's more debt in the system than there's actual money in the system. So when they're talking about us being in so much debt to the tune of over 100% of GDP, it sounds good now until there's another crisis. See, this is what you have to think about. All of this stuff sounds great until we have another crisis. So now, if we are 125%, 130% of GDP a year from now, 2 years from now, and we have another crisis, what tools would we have to fight that crisis? If the Fed already has interest rates at basically 0%, if the Fed's balance sheet is well over $7 trillion, what other tools do we have? See, these are the things that you have to start thinking about. This is where preparation comes into play. Do not allow them to rock you to sleep. Do not fall asleep to what's happening here. Don't let articles like this make you think, oh, everything's okay, because it's not. Just a year ago, everything was going great. It was no problem. Then rumblings came out back in January that, hey, something's happening in China. There may potentially be this thing that's spreading during the Chinese New Year. And then the CDC came out and the World Health Organization said, oh, don't worry about it. Right? It's not that serious. We got this under control. And now here we are, almost coming up on a year, and we've been locked down for a year. Now we're going into the second lockdown that's about to approach us right around the time of an election. Right? So you have to look at these things, and you have to think. Do not allow these people to rock you to sleep. Now, throughout all of this, as I'm going to keep reiterating, there will be a lot of investment opportunities for you, for those of you who are looking to invest. Smart. Do not be fixed to any one way of thinking. Be nuanced in your talking points. Be nimble. Don't panic. Don't be afraid. And don't be a pig either. Don't be greedy. So, it says, it actually happened much sooner, sometime before the end of June, meaning we've already surpassed, our debts already surpassed 100% of our GDP. The pandemic and the economic collapse that followed unleashed a historic run on government borrowing, trillions of dollars for stimulus payments, unemployment insurance, expansions, and loans to prop up small businesses and to keep big companies afloat. But the economy hasn't drowned in the flood of red ink, and there's a growing sense that the country could take on even more without any serious consequence. At this stage, I think nobody is worried about the debt, said Oliver Blanchard, a senior fellow at the Peterson Institute for International Economics and former chief economist for the International Monetary Fund. Think about this now. I just did a video the other day where I was talking about how the IMF director was calling for a new Bretton Woods. This is all a part of the plan. If you read the book, The Creature from Jekyll Island, you know what's to come. If you are a student at My Tech Academy, these are the resources that I want you to read. If you've been reading the books, what has government done to money? 1984, the Bitcoin standard, The Creature from Jekyll Island. None of this is new to you. None of this should be new to you. The plan is to deindustrialize the West. They accomplished that. All of the manufacturing is happening far in the East. The next is to burden you with trillions of dollars of debt that you can't pay back. So right now they're telling you, oh, don't worry about it. It's not a problem, until it becomes a problem. And this is what the IMF they've done this to Jamaica. They've done this to a lot of African nations, where they basically get you in so much debt that now they have to come here and force austerity on you, where you have to cut back these programs. Pay attention. Now is not the time to be playing politics and playing Republican versus Democrat, because to be honest with you, neither party has a solution to these problems. And this is all a part of, we do need a great reset. just not the reset that they are planning for you. The IMF has been bankrupting nations for decades. The same thing is going to happen here in the States because we're already surpassed 100% of GDP as far as our GDP, our debt to GDP ratio. Pay attention to this. And let me put this article in the chat because I know some of you, you may not be able to watch the entire stream. Right? It says, it's clear that we can probably go where we are going, which is debt ratios above 100% in many countries. And that's not the end of the world. The nonchalant attitude that were once thought to be major breaking points reflects an evolution in the way investors, economists, and central bankers think about government debt. As levels of debt among rich nations like the United States and Japan have climbed relentlessly in recent decades, the cost of carrying that debt reflected in interest rates has tumbled, leaving little indication that markets were losing confidence in the willingness and ability of these countries to carry their financial burdens. Now, think about this. How long have I been saying to you, I know interest rates are going to go negative. I know that they have to keep dropping interest rates because if interest rates spike, the biggest expenditure on our debt would be servicing the debt, just the interest on our debt. There's no way, right? Because our debt levels are so big. So understand, as the national debt continues to grow, right? As debt continues to grow, if interest rates spike, we're doomed. So you know that they're not going to do that. So I see interest rates low, if not negative, for the foreseeable future. So a lot of you ask me, how do I know this? I know this by just simply following the clues that's in front of you, right? It says, and since the 2008 financial crisis, traditional thinking about borrowing by governments, at least those that control their own currency, has further weakened as central banks in major developed markets became enormous buyers in government bond markets. Think about that. You have the central bank buying government debt. Now, why is this important? Because now this takes us over to the Fed, and this takes us to the Fed's balance sheet. Now, if you come back here to 2008, the Fed's balance sheet was less than $1 trillion. And I'm going to play Ben Bernanke's words for you because he was the previous chair, a Federal Reserve chairman before Janet Yellen. It was less than $1 trillion. And then, boom, it spikes up. And look, it keeps going and going and going and going. This keeps the Ponzi scheme going because if you know about fractional reserve lending and banking, if you understand how money is created out of nothing, how money is literally created out of debt because the government has to tax its citizens to pay back this debt. It was at $4 trillion. And then look, it spikes. Now we're at $7 trillion going up to $8 trillion. Now, I want you to listen to what Ben Bernanke said back in 2008, 2009, 2010 about unwinding the Fed's balance sheet, because this is important about what's going to happen with this election. If we get to the point where we have gridlock and nothing can get passed, the Fed is going to be the buyer of last resort. So this now further grows income inequality because the Fed is literally propping up the stock market. And we know the top 1% mainly controls the stock market. So the Fed is the greatest driver of income inequality. It's not government policy. See, you get caught up in this whole Republican-Democrat debate, and many of you are not focusing on where you should be focused at. The problem is the Fed, because the Fed literally picks winners and losers, where they want to prop up assets. And as long as you keep propping up assets, you're literally rewarding the same people who are basically, at the end of the day, they don't need any more money. Jeff Bezos doesn't need any more money. Yet Jeff Bezos got richer during the pandemic. Yet you got one bailout. You got one stimulus check. And then now you don't know when you're going to get the next one. This is the problem with the Fed. Now, this 60 Minutes interview, I believe this 60 Minutes interview was in early 2009 when this interview was released. And this is very, very important because follow and listen to what he's saying.
midst of the crisis, Bernanke had freedom to act immediately. He doesn't need prior permission from Congress or the president. While they debated on Capitol Hill, Bernanke cut interest rates nearly to zero. Then he used Depression-era emergency powers to launch a dozen rescue programs of his own. There was support for money market funds, mortgages, short-term lending to small businesses, and support for auto loans, student loans, and small business loans. Commitments of $1 trillion, doubling the size of the Fed's balance sheet.
Is that tax money that the Fed is spending?
It's not tax money. The banks have accounts with the Fed much the same way that you have an account in a commercial bank. So to lend to a bank, we simply use the computer to mark up the size of the account that they have with the Fed. So it's much more akin, although not exactly the same, but it's much more akin to printing money than it is to borrowing.
You've been printing money.
Well, effectively, and we need to do that because our economy is very weak and inflation is very low. When the economy begins to recover, that'll be the time that we need to unwind those programs, raise interest rates, reduce the money supply, and make sure that we have a recovery that does not involve inflation.
He's not kidding about printing money. The Fed issues U.S. currency.
So I'm going to replay that for you because I know some of you don't really understand why this is problematic. If you go back to 2008 and you listen to what he's saying that they're going to unwind the Fed's balance sheet once the economy recovered. Well, the economy recovered as of quote unquote last year if you listen to Trump. Yet the Fed didn't unwind its balance sheet. As soon as the Fed started to unwind its balance sheet, what happened? The economy started to tank. The stock market started to tank. And people like Peter Schiff have been saying this for years. There's absolutely no way that the Fed's going to be able to sell these toxic assets back into the market. He also said that they were going to be able to raise interest rates. Every time they tried to raise interest rates, the economy started to do what? Tank, because Wall Street is addicted to what? Cheap money and stimulus. This entire economy is a bubble economy. When you see people buying houses, buying cars, going into debt, deep debt like that, that's the problem. The boom is part of the problem. That's the problem. And then the bust happens. So now here we are. Interest rates are basically at zero. We're in more debt now than we were back then. Unemployment is spiking again. The balance sheet is almost at $8 trillion. And if you look at the money supply, let's pull up the actual money supply. Let's look at him too. If you look at the money supply, here is 2008. Let's make this bigger so that you can see it. Did the money supply shrink since 2008? Because these gray boxes here, right? They are basically signaling a contraction in the economy when we had a recession. Well, look at the money supply. It just goes up and goes up and goes up and goes up and goes up. And then now look, we get the hockey stick because it's something known as exponential growth where the doubling effect starts to get quicker. So when you look at money supply, nothing that Ben Bernanke said was true. Then we had Janet Yellen. Now we have Jerome Powell. So if these people have been saying these things for over a decade, and books like The Creature from Jekyll Island have been accurate about this for over 30 years, don't you think you should start wanting to listen to these people? The problems that we are facing is beyond Republican versus Democrat. It's beyond that. The Great Reset is here. And this always ties back into crypto because I truly believe that crypto is our only solution. Inflation didn't go lower. Now, I'm going to replay what Ben Bernanke said after now you've been informed with this information. So we know the money supply didn't decrease, it increased, it doubled. Think about that. Dollars in circulation doubled. In a 11-year span? We know that the Fed's balance sheet didn't shrink. It got larger. We know that, right? Back here is 2008. It's flat. Then it doubles to 2 trillion. Then it doubles to 4 trillion. Now it's about to double again to 8 trillion. We know now with public debt right? We're about to surpass our GDP, right? We know this. So you have to start making sure that you are paying attention. And again, expect volatility. But throughout that volatility, there will be opportunity. And you have to seek out opportunity. Don't be fearful. Embrace this. Those of us that are planning will thrive. Those of you who do not plan, those of you who listen to politicians who promise you the world and give you nothing will fail. Think about this. You have to pay attention. So let's listen to him again, and then we'll move forward from here.
But on the whole U.S. economy,
They push back and all say, oh, Mr. Chairman, it's probably not.
He had freedom to act immediately. He doesn't need prior permission from Congress or the president. While they debated on Capitol Hill, Bernanke cut interest rates nearly to zero. Then he used Depression-era emergency powers to launch a dozen rescue programs of his own. There was support for money market funds, mortgages, short-term lending to small businesses, and support for auto loans, student loans, and small business loans. Commitments of $1 trillion, doubling the size of the Fed's balance sheet.
Is that tax money that the Fed is spending?
it's not tax money. The banks have accounts with the Fed much the same way that you have an account in a commercial bank. So to lend to a bank, we simply use the computer to mark up the size of the account that they have with the Fed. So it's much more akin, although not exactly the same, but it's much more akin to printing money than it is to borrowing.
You've been printing money.
Well, effectively, and we need to do that because our economy is very weak and inflation is very low. When the economy begins to recover, that'll be the time that we need to unwind those programs, raise interest rates, reduce the money supply, and make sure that we have a recovery that does not involve inflation.
He's not kidding.
So we know none of that is true, and none of that happened. The exact opposite happened. And again, we have the election coming up. It's looking like Joe Biden's going to win. With crazy liberals like AOC and the lady Ilhan Omar, and all of these people they're buying into this idea that debt and deficits don't matter. They're buying into this whole idea of modern monetary theory that because our debt is denominated in dollars, we can abuse that reserve currency status. I'm telling you, China, Iran, and Russia, they're all looking to get away from the dollar. This is all a part of the grand scheme. And this is where cryptocurrencies come into play. This is where the central bank digital currencies come into play. Again, you don't have to have a PhD in finance because now here you have Christine Lagarde coming out and talking about the digital euro. Last week, if you go and watch the video where I was talking about the IMF with the new Bretton Woods system. Now, someone just posted here in the chat, what books, if you are part of My Tech Academy or if you're not, right over here, if you come to resources, these are the books that I recommend all of my students read. And so that you could be informed as to what's happening, why technology is deflationary and why the Fed is basically trying to fight technology. The Price of Tomorrow is a beautiful book. 1984, to understand how we're going into this police state where we're going to have a blend of, George Orwell's 1984 and Aldous Huxley's A Brave New World. Reading a book like The Bitcoin Standard. But as far as understanding money and the history of money and monetary policy, The Creature from Jekyll Island will tell you all you need to know. G. Edward Griffin did a beautiful job breaking down all of these things, because what a lot of you don't understand is 2008 wasn't the first time that bailouts happened in this country. And again, if you look at that, you'll start to see that there's a pattern of behavior here. And if you understand Bretton Woods and you understand the link to gold and how gold was discipline for politicians, because as long as politicians, they don't have anything constraining them and holding them back, they're always going to spend more than they bring in. That's just human nature. They will always be tempted to try to inflate the money supply. It will always happen. This is why you need things that are outside of man that you can't print more of. And then this ties into cryptocurrency with, digital currencies, because gold at the end of the day, no one's walking around with, $50 50 gold bars to go buy a house. So because everything's digitized now, this is where Bitcoin comes into play about being a digital store of value. And seeing Bitcoin begin to start to decouple from the stock market and actually hold its value is powerful, because now it starts buying into the idea of the store of value argument. And then if you look at the fact that 60% of Bitcoin that's in existence hasn't moved in over a year, that's telling you that people are actually holding their Bitcoin. And I posted that graphic in the community tab for those of you who want to see that. So you're starting to see that more and more people are buying Bitcoin. And now you're starting to see even major companies like Square get involved, and MicroStrategy get involved, and PayPal get involved. And what you're going to start to do is you're going to start to see a lot of people flee the dollar because of what's happening with debt and deficits and inflation. You're going to start to see, you're already seeing it. If you've been following this channel, I've been spot on accurately predicting all of these things were going to happen. Even in central bank digital currencies, I was telling you that it's a matter of time. And yet I have people who still come on here somehow and they tell me that, crypto's a scam, right? No, there may be cryptocurrencies and DeFi protocols that are scams, but Bitcoin isn't one of them. Satoshi realized this, and Nipsey Hussle even spoke about this. I have a video breaking that down. You cannot solve this problem with a protest. You have to create a system that is revolutionary. The idea of just voting for the right person that they're going to solve these problems won't happen, because many of these people, they're Keynesians. They believe in just printing more money, right? That's number one. Number two, they all are affiliated with each other. They all they live in the same neighborhoods. They went to the same colleges. They've been institutionalized. So they all think the same, right? Just print more money. Just cut taxes, right? Just create another government program. It doesn't happen. So let's listen to what she's saying now about the whole idea of central bank digital currencies. Because again, how many different people from different countries, different banks, different institutions have to keep mentioning central bank digital currencies before it clicks in your mind? It's coming. Get on board.
We are still in the review and consideration stage, but we've just launched a public consultation so that we are still in the review and consideration stage, but we've just launched a public consultation so that consumers and Europeans can actually express their preference and tell us whether they would be happy to use a digital euro just in the way they use a euro coin or a euro banknote, knowing that it is central bank money that is available and that they can rely upon. We are still in the review and consideration stage, but we've just launched a public consultation so that consumers and Europeans can actually express their preference and tell us whether they would be happy to use a digital euro just in the way they use a euro coin or a euro banknote, knowing that it is central bank money that is available and that they can rely on.
So, again, if you go back and you've been watching my videos, I know some of you are new to my channel, so you may not really fully understand what I'm saying. This is all done by design. Deindustrialize the West, heavily indebt the West, get them heavily in debt. Then now say to yourself, oh, debts and deficits, it doesn't matter, to the point where then it does matter. And then we're going to have a bail-in. All of your money that's in the bank is going to be confiscated, all of that wealth, and they're going to give you this new digital currency. And everything is going to be on a public ledger that they can watch, and they're going to be able to tax you. They're going to be able to inflate and track you all throughout the economy. And this goes back into Aldous Huxley's A Brave New World. This ties back into, George Orwell's 1984, where Big Brother will always be watching you. Big Brother will know what's happening, when it's happening. They'll know when to inflate the money supply, when to contract the money supply. You will have no more freedom. And China's already experimenting with the central bank digital currencies. So that's very, very important. Now, we do have a solution to that. We have crypto. We have Bitcoin. And every day that Bitcoin survives, Bitcoin gets a little bit stronger. Now, someone asked me about mining. I don't teach about mining because I don't unless you're living in a part of the world where electricity is free or it's cheap, I just don't think mining is feasible for the average person. Just don't. Unless you have very, very, very cheap electricity. A person who's really big into mining that you may want to follow is a guy by the name of Vosk Coin, VOSK Coin. He has a YouTube channel. He gives away a lot of free information about mining. That's not really my wheelhouse. I'm not really big into mining. I would say like I'm just not interested in the actual mining. I know about how it works, but as far as like, which GPUs you should be using, ASIC miners and hashing and all that, that's just not my wheelhouse. We mainly focus on how to use the technology, how to invest in the technology, and how to build the technology. That's what we focus on at My Tech Academy. Focus on trying to get you a job. Focus on trying to get you a skill so that you can survive and thrive in the fourth industrial revolution is what we focus on. There are other people who focus on different aspects of crypto, but we don't really focus on that, which leads me to my next point. And the link for My Tech Academy is in the description below, and it's also in the chat. We have a free 7-day trial. You're welcome to test it out and see if you like it. So now this leads me to my next point about this DeFi hack, because I had a student of mine, I'm not going to say the name, but he said, why don't I teach about DeFi? I'm basically costing my students money because I'm not teaching you about all of these garbage DeFi projects that are launching every week and people are losing their money with these different yield farming, schemes. So right here, we had a hack with our Harvest Finance. And it wasn't a hack. It was an arbitrage exploit that happened where someone was able to utilize a flash loan and exploit the different liquidity pools and basically drain one of the liquidity pools for $24 million. It says $34 million, but I think that this is a typo. It was $24 million. When you look at this, you don't have to be greedy. Two types of people get rich in crypto: holders and founders. Buy your crypto, put it on a ledger, hold it. If you are lucky enough to build something, great. You'll get really, really rich. Many of you think that you have to jump to every shiny object that comes. Every week there's a different cryptocurrency launching. You think that you have to buy it. And you see these people on Instagram and they're showing you, we're up, 22x or 30x. Newsflash, you don't make money until you sell. You can have all of these gains on paper in your little account, and then you wake up one day and you have a yam or you have a sushi and the price drops 90% on you in a day, in a week, because you're being greedy. Hit some singles, get on base, and eventually you'll hit a home run. You don't have to reinvent the wheel. If you've been following me, you should have been making money. And again, this isn't financial advice. You've been buying gold, you should be up close to 100% on your money. You've been buying Ethereum, you should be up 3x. Bitcoin, you should be up, 2x on your money. Chainlink, I've been telling you about Chainlink since it was at around like $1.50. It's trading at like $11 now. It's 4x. How many X's do you want on your money? Use your brain. Understand that we are dealing with high-level cryptography, high-level computer science, high-level mathematics, high-level economic game theory when you're dealing with these different cryptocurrency projects and protocols. So when you look at Ethereum, you look at this DeFi stack that everyone keeps telling you about, the more that you add onto that stack, the more complexity that you add, the larger the attack surface will become, to the point where many of these people who are creating these DeFi projects, they don't even really understand the risks that they're taking. Doesn't that remind you a lot if you go back to 2008, when you start looking at the derivatives bubble? Many of these banks and institutions didn't really understand the risks that they were taking. And when you understand game theory, start thinking about this for a second. And you start thinking about incentives. Let's say you have a smart contract. Okay. And you get the smart contract. You get an audit done on the smart contract. Great. You pay $100,000 to get the smart contract audited. And it comes back and it say nothing's wrong with it. You think that the person who's auditing the smart contract, if they find a flaw in a smart contract and they realize that there's over $1 billion locked in that smart contract, $1 billion locked into that protocol, and you only gave them $100,000, you think that they're going to tell you to exploit? Or do you think that they're going to keep that exploit for themselves, wait for you to grow the assets inside of that protocol, and then exploit it? 100%. Because they're incentivized. You're dealing with pseudo-anonymous technology where you don't have to disclose who you are, right? And you go to this person, oh, they audited the smart contract and everything's fine. In the case of Harvest Finance, that's what happened. So now you idiots out here, you're putting your money into something that you don't understand. You don't understand the risk. And then now you wake up and someone exploits a smart contract for $24 million with a flash loan. Stop chasing garbage. Stop allowing these people to manipulate you. Stop allowing these influencers on YouTube and these meme coins and these food coins to exploit you. In the academy, I teach you how to get to the money. I don't have time to play with the liquidity mining, yield farming. Those are games. Those are gimmicks. If you don't know who the sucker is, most likely you're the sucker. If you believe that you're going to be able to exploit these protocols and get a 30% or 3,000% APY, you in your little mother's basement, you're going to get that. You're a fool. And this keeps happening over and over again. And it will continue to keep happening. And this is why in the academy, I was teaching you guys about Ethereum, and I was telling you Ethereum is very ambitious for what they're trying to accomplish. I own a lot of Ethereum. But the more you start adding to that type of software, crypto is hard. This isn't easy stuff. This is very, very complex, high-level stuff. High-level technology. This is not something that you just learn in a weekend. There are people who have PhDs in cryptography, in mathematics, in IT, and they don't really understand some of this stuff. So what makes you think that you, sitting in your bedroom, you're going to understand different liquidity pools and curve, right? How these people are exploiting the curve pool, and then they're going over here to Maker. You don't understand none of that stuff. So why would I teach that? Why would I teach you something and put my face, my brand on something, and then now turn around and tell you, oh, well, you lost your money? This is why people like me, it's hard for me to build, because I don't believe in promoting garbage. I believe in giving you guys actionable information, right? I don't go out here and promote to you garbage. I don't go out here and promote to you 10x gains, and then you put your money in Yam and it drops on you and I go, oh wow. I don't do that. It's important that you understand this now. What happened with Harvest Finance, I wouldn't say it's illegal, right? Because it's just arbitrage, it's trading. And you have to know what you're putting your money into. Now, this is where Bitcoin comes into play. Because, again, every day that Bitcoin exists, it becomes stronger. This is why Bitcoin is boring, clunky, slow. You can't develop on it. You know why? Because when $1 billion are at stake, I'm not putting my money into your science project. Ethereum is a science project, period. There's a bunch of young programmers playing with people's money. Some of these protocols are amazing. They're going to revolutionize and change the world. And some of these things are just flat out science projects. Know the difference between a science project and something that's established. So you can hear all these people tell you, oh, Bitcoin's slow and they can't do a lot of transactions, right? It's bad for the environment. Proof of work is established. It's proven. Proof of stake and all of these different mechanisms that they're trying to come out with and solutions for scalability, they haven't proven themselves to the degree that Bitcoin has. which is why Bitcoin is the OG, which is why you see so much money and resources being poured into Bitcoin, because your money is supposed to be boring. Where's my gold at, right? I can't find my gold. I don't know where I put it at. Here we go. Right? Gold is boring. Silver is boring. You know what it does? It sits there. Your money shouldn't do anything. Your money should be able to just sit there. That's it. And if you lend out your money, you should be able to receive interest. That's it. Your money shouldn't be used as liquidity in this pool, and then I'm going to send it over here to USDC, and then I'm going to have it in this liquidity, this DAI versus ETH pool, and then I'm going to try to make the spread. Your money shouldn't be doing that. If your money is doing all of these different things, most likely it's going to lead to a problem. And every week today, there was another exploit that just happened with some with another one of these DeFi protocols. Be smart with your money. I structured the academy the way that I did because I want non-technical people to be onboarded. I want you to be safe with your funds. Be smart with your money. Do not be stupid. Stop. I've been in this game now for 8 years. I've witnessed everything under the sun when it comes to crypto. You have anonymous developers. You don't even know who the people are behind these projects. You got the guy Andre behind Wi-Fi. He launches something and he gets $10 million into his smart contract for something that he said wouldn't even work, because people are greedy. Everyone's looking for the next Bitcoin. There will be no next Bitcoin. We have Bitcoin. That's it. Now, will there be things that will be a little bit better as far as have better trade-offs in certain aspects? Absolutely. But at the end of the day, when it comes to store of value, Bitcoin has captured that market. Put your money into safe things that make sense. Right? If you're dealing with smart contracts, you need a way to get external data into those smart contracts. Okay, you need an oracle, you need middleware. That's where things like Chainlink comes into play. You see how I invest? I invest very simple. Okay, we still need scalability solutions. That's where Polkadot comes into play. That's where Cosmos comes into play. Okay, I want to own a little bit of that, right? Ethereum being a base layer protocol where they're going to have dApps built on top of it. Okay, I want to own that. You don't see me on here pitching to you every week the next hottest, latest crypto. If you're looking for that, please go follow BitBoy Crypto and Chico Crypto, and they'll pitch you every coin that's going to go 100x in the next 30 days. I don't do that over here. I focus on things that make sense. Because at the end of the day, I want to be able to look you in the face and be able to show my face and know that I'm not scheming on you and I'm not getting paid on the back end to pump some garbage to you, right? And if you're in the academy with me and you want to get involved in all of this sexy liquidity mining and all of that, God bless you. Please don't join. Go find someone who's going to show you how to 30x your money in the next 30 days. You won't find that over here with me. Right? Now, when I'm talking about game theory, right? I want to post this in the link because I want a lot of you to these links in the chat. I want a lot of you to educate yourself. I'm really, really big on educating yourself, right? Knowing what you're putting your money into, knowing the risks, knowing the pros and the cons. Many of the people who were inside of Harvest Finance, they didn't know the risks that they were taking on. I'm pretty sure the people who created it didn't know, because again, you're dealing with very, very complex stuff, and you need to make sure that you are educating yourself. This is why I created the academy, to educate you on things that can make you money, right? Focusing on things that can actually make you money. Great filibuster. Ledger was hacked, so they have a lot of your personal information, right? Make sure that you are, first of all, never give anyone your private keys. Never give someone your private keys, ever. Secondly, I taught you guys about how to use a VPN in the academy. I taught you guys about which VPNs that you should be using. Don't just click on random links, right? Anytime someone texts you about crypto, don't click it, just delete it, right? Emails that you receive, you should have a filter on your email as far as what you're receiving. Anyone emailing you about your private keys, entering your password here, you should automatically, you won $1 million. Scam. Don't put your money in it. Don't do it, right? Because they've been hacked. The database has been compromised. And this goes back into the whole idea about decentralization and about middlemen. This is why you need decentralization, because companies do a very poor job at protecting your data. It's a honeypot. So when you look at all of these KYC laws and these AML laws, it incentivizes companies to get hacked because they're holding all of your data in one centralized location. So the hackers know all I have to do is go here to get this information. Use your brain. Do not mess with the garbage. BlockFi is okay. BlockFi is not bad. Right? BlockFi is not bad. I haven't really had a chance to mess with it because I'm creating a DeFi course right now. So I'm messing with some other things that I feel are a little bit more, that would be a little bit more beneficial to the students in there. So I haven't really been messing with BlockFi because I'm in the process of creating something. I think that there are things that are a little bit better than BlockFi in my personal opinion, but it's not bad. Now let's start looking at the markets. Let's start seeing what's going on since we're talking about markets, right? So last week, this is the weekly chart that we're looking at right now, and I'll take some questions in a second. NordVPN, I've never used it, but I've never used it, but I haven't heard anything bad about it, honestly. 100% run your own node, right? You guys know I use Surfshark. If you're in the academy, Surfshark is a pretty good VPN. Also for privacy, remember, and I shouldn't be saying this, but I say things I shouldn't say all the time. You should be buying or signing up for your VPN with crypto because you want to remain anonymous, right? You should not use your bank card that has your name on it to sign up for your VPN because you basically just doxed yourself. You KYC'd yourself, right? Like if you use your debit card that has your name on it, well, your bank has to report all of your transactions to various different regulators, right? So you should be using crypto when you can, right? That's the whole purpose of trying to be pseudo-anonymous, right? So make sure that you're, paying attention and definitely connect over Tor. Good point, Mr. G, the recycling guy. I'm a big fan of Tor, and I'm a big fan of building your own computer and bootstrapping all your own software onto your computer. Again, you can go look this type of stuff up on your own and find it. But last week, this is the S&P 500. We had this big sell-off. Now we're hovering right here. I believe that tomorrow we may rally a little bit, maybe 20 points, 30 points. But in the grand scheme of things, I see the market tanking. I see the market tanking in a major way. Again, be prepared. Don't be afraid. Don't get scared. Have your debit cards ready, your credit cards, whatever you're going to use to get into your investments. Get prepared, because I believe that crypto is definitely going to drop a little bit lower. But again, we are starting to see Bitcoin decouple, but I still believe that we're going to get a drop. So I believe the S&P is going to probably drop to about 3,100, maybe even lower in the coming weeks. Gold, right now in gold, this is the weekly pullback. Let's pull up a daily chart, see what's going on with gold. Yeah, to me, gold is just consolidating and moving sideways. So I believe gold's going to take another leg up higher. So if we get like a push down in gold, let's say we drop $100, $200, buying opportunity. Remember, the only way out of this is inflation. They're telling you they want to go above 100% GDP. That's the only way out of this is more inflation. So me, I use AppMex. You can. There's another one called JM Bullion that you can buy gold from if you want to. If you don't want the physical exposure, I don't know why you wouldn't want it. If you don't want to actually physically hold your gold, you could buy the GLD, the ETF. I don't recommend doing that. Also, as far as like precious metals mining stocks, I believe that that's going to give you more alpha. It's more room to the upside with these miners, especially the junior miners. So that's something that you should definitely want to take a look at. If you've booked a consultation with me, all of this will be laid out for you of like, different stocks and portfolios and how to balance a portfolio. So for those of you looking for a consultation, I'm free for the week. So I only have 2 consultations, and those will be taken care of tomorrow and the following day. And we go over portfolio balancing, because this is during times like these, you need to make sure that you are balancing your portfolio properly so that you're not over leveraged or overexposed to one particular asset class. Because remember, at the end of the day, crypto is tiny, right? Like when we look at crypto, it's less than $400 billion. Wow, I'm so sorry, JB. Oh man, I apologize, man. I've been so busy creating this new course. I apologize, man. I totally was supposed to get back to you about the Monero thing. It's funny you say that, because I had a problem with Monero with my my ledger. I don't even know. I was going to show you. They updated the node that you was running on your computer, and I was having problems with my ledger. So here, go right here. It's funny you said that, because I was literally just playing with my ledger the other day trying to fix get my Monero. If I had $15K to invest, number one, I wouldn't put it all in crypto. And this isn't financial advice. I have to say that to protect myself legally. A bulk of my money. So for example, let's say I had $5,000. I would take a third of that. $15,000. I would take a third of that, put it in Bitcoin. And then I would probably take 15% of that and put it into Ethereum. Another 15% put it into Chainlink. And then that's what, 15, that's 30. Then a third, that's another 30. So that leaves you about with 40% left. And then I would take the other 40% and I would look at stuff like Polkadot. I will look at projects like Atom. I would look at projects like Celsius Network, VeChain, and these are all things that I own. What else do we see here? Ontology is a project that I like a lot. I said Cosmos, right? Synthetics is going to be big with derivatives. We know that the derivatives market is a huge market here. And honestly, that's really it as far as where I would put my money at. Honestly, a lot of this stuff would be experimental. Band protocol, I would play in Band off of being a derivative of Chainlink, right? So when I look at Band protocol, there can't just be one oracle. So I would put money into Band because you can definitely probably double your money in a Band. But for me, it just makes more sense to stick with what I just said to you. That the 40% that will be left over you can play with. But I would basically go 30% into BTC, 15% into Ethereum, and 15% into Chainlink, which will put you at 60%. And then you have 40% left over that you could play with. So you can look at things like Polkadot. And I don't really look at Monero as like an investment. I look at Monero more as a transactional currency. That's my personal opinion for the privacy features that it gives you. But I don't really look at it as an investment. And that's an Atom, right? Cosmos. And if you book a consultation with me, we can go into more detail as to why I think this. Because I think that you should have different cryptocurrencies that are trying to compete in different segments. VeChain is a monster. I've owned VeChain. I've made a lot of money in VeChain. So I would definitely recommend VeChain. And that's about it. I don't like to really play in anything below the top 100. Oh, I forgot my favorite cryptocurrencies. Augur and HBAR, Hedera Hashgraph. So that 40%, you can divvy that 40% up that's left. You could divvy that up into, like I said, Polkadot, HBAR, Augur, Cosmos, and that's it. That's really it. What I like. And Band Protocol. I'm about to pull a trigger on Band Protocol. And that's really it. All this other stuff here, I mean, to me, it's just gambling. Like anything below the top 100 is just gambling. Thank you guys for enjoying the content. Thank you, Black Devon, for the donation. But I don't think that all your money should be in crypto, JB. Right? So this leads me to my next point. I think that you should definitely get some exposure to precious metals mining stocks. Because again, gold and silver has a role to play. And again, you're dealing with an asset that has, a finite supply. It's not infinite. So I don't think that all of your money should just be in crypto. Excuse me. I really think that you should be looking at precious metal mining stocks. 100%. So again, that's something that you should want to take a look at. And again, it's not financial advice. Aave is cool, but these are a lot, like, you're really banking on the governance models, right? You're basically buying like a governance token. It's cool. These DeFi projects, they're cool, but I would be very, very careful with the DeFi space, in my personal opinion. I've mentioned Aave and Loopring. I think that Aave and Loopring, and Maker, they're very, very they're promising pieces of technology, but after watching what's happening with Harvest Finance and just seeing these different things, I really think you guys should be very, very careful with these DeFi protocols. I think you should be careful. Can you make a lot of money in these DeFi protocols? Absolutely. Be careful, especially with these governance tokens. Be very, very careful. Ripple is complete garbage. I wouldn't buy Ripple with your money. I wouldn't touch Ripple. I would not touch Ripple at all. Ripple is trash. It's garbage. It's one of the biggest pieces. If you go back, just watch my videos. I don't cherry pick. I said to you, this is back when Chainlink. I've been screaming about Chainlink on his channel back when it was in the $1.50, $2 range. Go back and watch my older videos. Go back and watch them. Don't like sit up here and think I'm cherry picking. Go back months ago. Chainlink was at like 14, 15 on this list. It was down to like 16. I said BSV was in the top 10. Cardano was in the top 10. Litecoin was in the top 10. Bitcoin Cash, Ripple. I said none of those projects deserve to be above Chainlink. There's nothing that Litecoin, Bitcoin Cash, or Ripple is doing that they should be above Chainlink. Chainlink is revolutionary technology. Period. If you want to get external information into the blockchain, you need an oracle. You need middleware. Chainlink is dominating that space. Chainlink easily, without blinking an eye, could be worth $100 billion. Easily. I stand on that. Mark it down. Come back to this video. Call me out on this. Easily. I scooped up a big bag of Chainlink at 7 cents. And if Chainlink drops, my kill zone for Chainlink is all the way down to $3. I will be buying everything that I can scoop up when it comes to Chainlink. When you look at the BNB coin, look what's happening with the DEXs, the decentralized exchanges. When you have Mooniswap, you have Uniswap, you have 1inch exchange. We have all of these different decentralized exchanges. You don't need the Binances of the world. The whole purpose of crypto was to get rid of middlemen. Why do we need Binance? We don't. Right now, as far as on-ramps, you can say, well, you need like Coinbase and et cetera, et cetera. But look how the DEXs are exploding in volume. No reason why that needs to be in the top 10. I told you guys, Polkadot is going to be a beast. Look at it. Top 10. Been telling you that. Because Gavin helped create Ethereum. And he's been in this space for a very, very, very long time. There's big money and there's a lot of big technology behind it. Nothing innovative is happening with Litecoin. They dumped it on you and nothing's happened since. I've been telling you guys with Cardano, with the whole Shelly update and everything. Charles has been promising that Cardano can do things that it just hasn't been able to do yet. EOS, I told you EOS shouldn't be in the top 10. Any fork of Bitcoin should not be in the top 10. Bitcoin Cash, garbage. Bitcoin Satoshi Vision, hot garbage. Shouldn't be there. Been telling you that. Stellar, garbage. Tron just tries to copy everything Ethereum does. Duquesne Productions, I slept on Hex. I slept on Hex. I was one of those people. I wasn't a believer in Hex, and I was proven wrong. Right? You can't win them all. Right? So, I thought Richard was basically trying to cash in on his popularity, and I was wrong. So, see, one thing about me, I can admit when I'm wrong. I was wrong about Hex. Yes, consultations are for non-academy students as well. JB says, in terms of VPN, I also heard people use Visa gift cards bought with cash to sign up with NordVPN. Unfortunately, Surfshark doesn't take gift cards. So I'll try to use a different VPN. I'll put together a list for you, those of you who are in the academy, and I'll send it out to you of different VPNs that you can use. Some that utilize crypto and others that don't. I'll definitely do that. One thing about me, I'm very transparent with you guys. You know my bags. I'm making a killing in my crypto. I've been talking about this now for almost 2 years now on this channel. You can go back to my older videos back when Bitcoin was trading at $5,000. I was talking about it. When it popped to 14 and crashed down, I didn't give up on it. I've owned Bitcoin, before I lost all my Bitcoin in Mt. Gox and Butterfly Labs. I have a position mainly for like $700-800 of Bitcoin. So I'm deep in the money with Bitcoin. Ethereum, deep in the money with ETH. I haven't sold anything yet. I'm not looking to sell anything until we hit $1 trillion market cap. That's when I'll start looking to sell. When we see the overall market cap, the total market cap get to $1 trillion, because I own 0x. Let me tell you some of the coins that I'm not really doing that well in. I own Tezos, you know that. The only reason why I own Tezos is because I know people are dumb and they're always going to look for the next greatest thing. So I have money in Tezos, which is not doing that well. I always get this confused. Is it Neo or NIM that I own? One of the two. I'm not losing money, but I'm not doing well in those coins. What's the other one that I have that's not doing that well? 0x. I have a decent sized bag of 0x and it's not performing well. I have basic attention token. I like basic attention token, but it's not booming like it should be booming. What else do I have that's not really doing well? This is 0x coin. So you guys, you all know my bags. I don't lie to you. And thank you for the donation, JB. Yeah, I have a little bit of Cardano. I sold most of my Cardano actually a while back because Charles has been promising, Shelly and all of these different updates and upgrades, and it just hasn't happened. What else do I own? One more thing that's not performing well. I lost a lot of money into cred. Another coin I got burned in was Substratum. Ended up being a scam. That was years ago. It's not even listed anywhere anymore. That's it. Yeah. Matic. Matic is good. I own a little bit of Matic. I own Engine Coin because it was airdropped to me. That's it. All that urine finance stuff, guys, be careful with that guy Andre. That's all I'm gonna say to you. Be very, very careful. Be very, very careful. See, here's my thing, right? When I say that Ripple is garbage, it doesn't mean that you can't make money from it. Once Bitcoin breaks 14K, right? So let's pull up the Bitcoin chart, right? Once we break 14K, Bitcoin's going to take everything with it, right? Bitcoin will be the launch pad that lifts everything. We know that. So can you make money with Ripple? Absolutely. I'm talking about the technology. When you look at the technology of Ripple and you say to yourself, it's just like the things that they've been promising and selling for so long, no one's using it. No one's using it. right? They're dumping. I forgot how much Ripple they dump on you every single month. They dump it on you. They pay people to test out the technology. No one's doing it, right? The banks are building their own. They're building their own cryptocurrencies. J.P. Morgan was building the Quorum, and they just sold it off to or gave it to Consensus, right? So like no one's using their technology. But again, could it pump? I'm not saying that you should go out and sell it because it could pump. But as far as the technology is concerned, when you understand what Chainlink is and what it's going to do, why the hell would you want to own Ripple over Chainlink? Right? Why would you want to own Ripple over Chainlink? I don't understand it. I don't. Now, if you're underwater in Ripple, meaning like you purchase it at the peak, then I'm not going to recommend that you sell it because you could potentially get back to break even. So that's a personal decision that you have to make. I'm just talking about from a technical standpoint, right? When you look at the technology and you look at Polkadot and you look at Chainlink, why the hell would you want to own Ripple? Just like why would you? Just wouldn't, And like now you have ETH 2.0 here with the scalability that it's going to be able to bring to DeFi. I'm pretty sure that there will be new things that will get launched that will be launched on top of Ethereum 2.0 that you will be able to participate in. Or guess what? You may be able to build something. So that will go there. Let's see if there's any more. Well, the use case for Hex is supposed to be a like a CD, a certificate for deposit, right? A certificate of deposit. Basically, like you can earn interest on it. I guess that's the selling point. I don't really understand it. I haven't looked into it, but I guess that's what it is, right? Like it's a CD. Yeah, John Lycos is still coming. Remember, we made a bet, John. So, yeah, Matic's not bad though. Don't again, great filibuster. Matic's not a bad project. It's not a bad project at all. I own Matic. It's not a bad project. Cosmos is superior though. Excuse me. So it's not a bad project. Not a bad project at all. I don't mind Tesla's coming down. I'm staking, so I'm making something back. Yeah. A Ledger or Treasure? Ledger, 100%. Treasure just had an exploit happen recently. I have a big bag of Tezos as well. That's the next thing that we're going to get into in Academy about staking and stuff like that and getting into DeFi. The thing with DeFi is you have to test these things out. So that's what takes me a while to make the DeFi courses because again, when I put my face behind something and I put my brand behind something, know that I tested it and I have my own money in it. See, that's the difference between me and a lot of these people who will show you these different cryptocurrency projects. Will show you these different cryptocurrency projects. I have my money in it. I am not pitching you something that I'm getting paid to promote. Many of these other cryptocurrency influencers, they get paid to promote these projects. You will never see me promote a Yam. You will never see me promote a Sushi or Harvest Finance. You're just not going to see me do that because I've been around long enough to know there's no such thing as a free lunch in crypto. No such thing as a free lunch in crypto. So for those of you who want to know what books you should be reading, if you go to my website, mytechacademy.io, I have resources where you can learn about the different books that you should be reading to educate yourself, just as far as to, how money works, the difference between money and currency, what government has been able to do to money and how they've been able to manipulate money. And if you understand The Creature from Jekyll Island, you read that book, you'll understand very well how we got here, where we're going, and how you should be positioning yourself. So I'm going to wrap the video up here. For those of you who are interested in learning about blockchain technology, cryptocurrencies, and web development, and getting into the coding bootcamp that we have going on, we have a free 7-day trial at My Tech Academy. Simply click the link, come join the academy, and see if you like it. For those of you who are looking to book a consultation, I am free for the week. So please reach out to me. Don't try to book me when I get too busy and then get upset. I'm free for the week. Book your consultations now. For those of you who are students of the academy, we've launched our own Slack group now so that we can have better communication with each other. Because now with Slack, I can instantly respond to you now because I'll get the notifications to my phone. So we won't have any conflicts as far as communication is concerned. So I sent out a blast. You should check your inbox with the invite link. Come over to the Slack channel, introduce yourself, go into whichever Slack group you want to be a part of, and then we can start our dialogue from there because I want to create a community. Remember, the whole purpose of this is for us to collaborate with each other because there may be things that you know that I don't know. There may be resources that you have that I may need to get access to. And it will just help people network a little bit better. So that's why I created the Slack group. So with that being said, guys, please like the video, share the video, subscribe, hit the notification bell, set it to all, follow me on Instagram, shoot me a DM, and understand that we will have volatility this week. We are in the middle of an election. Don't get scared. Don't be afraid. Have some money on the side looking to buy, whether it's precious metals, whether it's crypto. Be prepared, be smart, and we'll probably do another live stream tomorrow night. Have a blessed and beautiful night.